program. Today's seminar has been put together with our nonprofits in mind. I'm Deborah Seefeld. I'm an audit partner with Briggs and Veselka, as well as the firm's nonprofit practice leader for our firm. Before I begin the introductions of our team members who have put together today's program, I really need to go over a few housekeeping tips that'll hopefully keep us all on the same page as we get started this afternoon. So for starters, to help with the audio, video, because of all the traffic we have on Zoom right now, the platform we use for this presentation, if you can please close out of all programs that are on your computer other than the Zoom platform at this time, this should help with the quality of today's program. Along with that, our slides from today's presentation will be emailed out to you at the end of this call. A lot of the information that we're presenting today is material that we have covered in webinars earlier this week, but they've been updated. As late as last night, this morning, we're still getting updates from the Small Business Administration, the U.S. Treasury Department, guidance from lenders. So again, a lot of this material will be duplicating, but we have a lot of updates that are coming out really fast and furious. I did want to note that the new legislation did not create really different rules for nonprofits. So I know many of you on the call today, even though this is a nonprofit webinar series, you are maybe a board member. A lot of what we cover today is probably going to be relevant for many for-profits. Again, same laws, we just have a different perspective today. Things are changing really literally by the hour. So after today's presentation, stay plugged in and up to date on all the information that's going to be forthcoming as more guidance comes out. We are recording this program today, so we do not have the ability to have live Q&A, but there is an icon on your screen on the Zoom taskbar. You can submit a question. So we're going to field those questions throughout the program. So hopefully maybe you will get a lot of your questions answered today. So again, I'm Deborah, and along with me today, my co-presenter is Angie Armstrong. Angie is a tax director with Briggs and Veselka, and also putting this program together is Kaylee Prescott. Kaylee's been instrumental in the technical preparation of today's program, so thank you, Kaylee, so much. A lot of the materials we talked about was on earlier webcasts. Those webcasts were authored and presented by Jason Sharp, Kevin Stewart, Eric Deal, along with the Briggs and Veselka SBA task force, who's been continuously monitoring the related efforts coming out of Washington and the SBA, along with the American Institute of Certified Public Accountants, our SBA lenders, and other organizations. And I say all this to let you know that not only for you, but for us, there is so much to learn, and it is changing rapidly as guidance is put forth. You know, usually when new legislation's passed, CPAs, along with other professionals, we study the issues, we look at different positions. We have months really to digest the new legislation before we assist. Well, as you know, a week ago today, last Friday, when the CARES Act was signed into law, none of us have time to wait. Our citizens, our business owners, you as nonprofits, those that you serve and others, they're all counting on us to work together to get this done and to get it done fast. So I hope you'll grab yourself a cup of coffee or Friday afternoon, maybe something cold to drink, and let's sit back and get started. So the pandemic, you know, what was Washington's response? You know, we've got three phases here. The key one we're going to hit on are the programs, the lending programs, the PPP and the EIDL, we'll call them, that y'all are really most concerned about. We're going to cover much of the changes that affect our tax law. As you can see, you know, they pushed off the tax deadlines for the April 15th filers back to July. We'll hit on that a little bit more later. Then we've got the Families First Coronavirus Response Act, which is now into effect, along with, fortunately, we're going to call it for short, the CARES Act that was signed again last Friday. And within the CARES Act, we've got really three programs we're going to talk about today. We're going to say the PPP, the EIDL, and the Small Business Debt Relief Program. We say phase 4, who can imagine? And certainly, hopefully, it's not going to stop with phase 4. So what's our response been here at Briggs and Veselka? Well, last Friday we formed a task force, and this is not only for internal but external education on Washington's response. Again, working together with those that serve you as well, lenders and so many different organizations, the SBA and others involved in this process. We've hosted 2 other webinars earlier this week. We've had over 1,000 participants. We are responding to questions as fast as we can, but you can only imagine each and every organization, you think about your nonprofit, it has so many different challenges than maybe other nonprofits that's on this call today. The SBA task force, we're ready to assist clients and working through so many of the details at this point. But again, just a matter of caution as we go through the presentation. The CARES Act was over 600 pages. It just came into place a week ago. So please, again, stay abreast of changes that are coming out. There were changes that came out last night, a little bit before midnight, that have changed much of the information about the programs that we thought we had a good handle on yesterday. There is not a cookie cutter answer for your nonprofit needs and questions. So we'll just work through those together. So, you know, which program is right for your nonprofit? As we look at the PPP, not all nonprofits are going to qualify. We're going to walk through the differences and the qualifications there. We have the EIDL loans, which, you know, so many also right now are interested in the $10,000 of emergency grant. Please note throughout this program, we're going to say up to $10,000. It's not an automatic $10,000 grant. And just a reminder that these EIDLs, they are loans. They are not forgivable, which we'll touch on. And then lastly, the Small Business Debt Relief Program, which is provides immediate relief for small businesses with non-disaster SBA loans. The SBA is going to cover those all loan payments on new and existing SBA loans, including principal and interest and fees, for up to 6 months. So as we go through this chart here, for me, this chart is something you can come back to after this program as really your go-to for a cheat sheet. You know, when you're saying, now, which one was that? Was that the EIDL or was that the PPP? This is not the best place to get the detailed information, but again, just a good memory jogger to look at some of the key aspects. You know, what can the proceeds of the PPP and the EIDL be used for? Just a reminder that PPP is primarily payroll. We'll go into that a little bit deeper in a few minutes. The calculations also on how much is covered. You can see the difference between those 2 programs. The 2.5 times business average monthly payroll versus the up to 2 million. As of last night, the annual percentage rate on the PPP we're seeing right now is coming out at 1%. Whereas the nonprofits on the EIDL loans, we're looking at 2.75. The loan terms on the EIDL, you know, what we're hearing will be, a lot of them will be like a second mortgage. There'll be a fixed year 30 term maybe, which is different from the PPP program as well. Then we look, of course, at forgiveness. The PPP, again, it is eligible for, important words here, up to 100% forgiveness with the proper documentation and approval. Very important. We were getting a lot of misinformation from nonprofit clients and others contacting us thinking it is automatically, you know, forgivable. Whereas the EIDL, again, good thing to go here for the chart, not eligible for forgiveness. It is truly a low interest rate, probably long-term loan. And then where to apply, very different here. Your PPP is going to be through an SBA approved bank or lender. So we're saying right now, if you haven't contacted your banker and you're looking at the PPP, please contact them if you can, even today, an email, a phone call. They are also overloaded, we understand that. The EIDL, that is going to be through the SBA directly, not through your bank. Another key difference here is for your nonprofits, which nonprofits qualify. We've had some questions coming in that say, you know, if we consider our nonprofit a church, do we qualify? We're coming back to what the law says. Only 501c3 and some 501c19s qualify for PPP. So if the church is a 501c3, talk to your banker and look at making that application. Again, we're coming back to what the law says. On the EIDL, it is all nonprofits if you have fewer than 500 employees. And then lastly, looking at that $10,000 grant, just a reminder, the PPP does not have a grant. That grant falls under EIDL. All nonprofits if fewer than 500 employees. So the PPP program. There was $349 billion allocated in the CARES Act to help small businesses, and this includes nonprofits, to keep people employed in the midst of all the hardship that is going on right now for each of your organizations. So the PPP is up to, it's 100% federally guaranteed and up to may be forgiven. Again, there are going to be documentations. There's going to be some type of application process on the backside where you're going to have to prove out, here we have taken this PPP loan, and now here is our forgiveness calculation. There's going to be an accounting that happens to make that forgiveness happen. Eligible applicants, as we just touched on, the 501c3 and 501c19 for the PPP program with fewer than 500 employees. There's requirements that the nonprofit be in operation as of February 15th, 2020. My understanding is this would to keep the new startup nonprofits from qualifying, for the program. An individual who is self-employed, who regularly carries on a trade or business, also can be covered under PPP. And we'll talk about that in a few minutes as we look at compensation. And then a tribal business concerns that meets SBA size standard. Ineligible is, again, we're talking about the PPP here, some nonprofits, your 501c6s that's on the call today and 501c7s are not eligible, it's our understanding, for the PPP. So what's an acceptable use of proceeds? To be eligible for the loan forgiveness, I mentioned earlier that there's going to be a look back. So the proceeds that you take from PPP must be used to cover specific costs during an 8-week period that begins on the date of loan origination. So when your organization and your board and your finance team is looking at, should we be applying for these loans, look at what you're going to be using the loan proceeds for. Your payroll must be 75% of your loan amount, and it must be payroll cost and healthcare benefits. There's a limit on the PPP to 25% of the loan amount for things such as mortgage interest, rent, utilities, facility type cost, and interest on other debt obligations that were incurred previous to February the 15th, 2020. So the maximum loan amount under PPP, we've had a lot of questions that have come in regarding this calculation. The average monthly payroll during the year before the date times 2.5. The latest guidance we're getting, a lot of our questions that have come in that said, when we're looking at payroll, are we looking at calendar year 2019? Or are we looking at, if I'm applying today, are we looking at April 1 of 19 through March 31st of 20? We originally, I believe, said on earlier webinars this week, be prepared to go with both to your bank. You don't want anything that holds the PPP process up as you're going through that application with the bank. So, we had been recommending have both of them. If you use Paychecks or ADP, they're customizable, downloadable reports that can be exported. And then, of course, you've got that $100,000 cap on salaries or wages, which we'll talk about in a minute. But you can, filter out those employees that are above the $100,000, and you can come up with those calculations both ways. However, new guidance that we're seeing in the last 24 hours as we're getting more information from SBA lenders is many of them are asking for calendar 2019. And probably this is good because it can be tied back to your tax return if it's been filed, your 990. It can be tied back to payroll returns. So, there's a way of validating and supporting that information. So again, we are seeing 2019 calendar, but be sure and check with your bank and what their requirements are. New guidance here. The payroll cost calculation does not include independent contractors. We've put that in bold because this is new guidance that has come out. We can interpret what the law says, and then we can come right down to what are the bankers asking for on their application. You're going to have to meet the bank's requirements as you go through the applying for the PPP. Right now, in the last 24 hours, we've learned as this is rolling out, they are not including independent contractors. Our understanding is, or at least my understanding on this is because an independent contractor themselves can apply for PPP. Things that the payroll cost calculation excludes, again, we're looking at $100,000 cap on salary and wages. No federal payroll taxes, U.S. residents only, FFCRA credit wages. Again, PPP, it's not a guaranteed forgiveness. The loan forgiveness that will happen and can happen cannot exceed the principal borrowed. Even if your actual expenses exceeded expectations on your loan application, that's what you would be limited to, would be the principal amount that would be borrowed, which makes sense. The forgivable amount is going to be reduced. If the number of employees is reduced, your forgivable amount is going to be reduced. Again, we're using this look-back payroll period to do a calculation. However, there will then be the truing up when the forgiveness application information is gathered to see the amount that truly is forgivable. So the forgivable amount is going to be reduced if greater than 25% of reduction in wages is paid to employees. So you've got a way that we're really looking at the cost benefit. Even with the reduced forgiveness, and you're left with a 1% operating loan with payments for, let's say 2 years. Is this something that's doable, with your nonprofit and would work for them? Our understanding is no personal guarantees needed, no collateral, and there's also no prepayment penalty. So we're going to shift gears here for a minute, and we're going to move into the economic injury disaster loan. A lot of us have been calling this EIDL. Some of us now are calling it EIDL. We're trying to get this as short as we can because we're talking about it an awful lot. So on EIDL, this is where the grants are, where applicants, nonprofits, all nonprofits can get up to $10,000. Again, up to, are keywords on this, and emergency cash grants, even if they don't qualify for additional funds. So the advance part does not need to be repaid under any circumstances on the EIDL program, and may be used to keep employees on payroll, to cover things for sick leave and for other disruptions that are going on within the organization. These EIDL loans I mentioned earlier may be considered almost like a second mortgage. They're low interest rate loans of up to $2 million. And they are available to pay for expenses that are more like operating expenses, more expansive than we looked at under the PPP program, which, as we talked about, is going to be primarily for payroll. So unlike traditional economic injury disaster loans, the CARE Now waives a requirement that you have to have, you're unable to obtain credit elsewhere when you apply for these. So we're looking at the key differences now. The key differences between PPP, one is the forgiveness. The EIDLs are non-forgivable. They're low interest, long-term, up to 30-year loans with scheduled principal and interest payments. The PPPs may be up to 100% forgivable, and again, if all the documentation and is maintained and proper and approved on the backside when the forgiveness application is made. As far as the grants, the EIDL is the program that has the $10,000 emergency grant that never has to be repaid, and on the PPP there is not an automatic grant with the PPP. At the end of the slides, at the end of our slides, we've got a long list of resources that will be very helpful. But just here pointing out the EIDL loans, as we talked about, are obtained through applying through the SBA. And there's a link here on this slide. And as a PPP, again, you're going to go to your bank. And if your bank is not a qualified SBA lender, reach out to whoever works with you from our firm. We've got a list of SBA lenders. We'd be glad to see who maybe could assist in this manner. Along with that, I do want to point out that some of the feedback we're getting from our banks is they do anticipate being overloaded. They're looking at, a lot of the banks are looking at, if you're an existing loan customer, they're kind of putting you to the front of the line. They already have a lending relationship with you and will be able to probably work through your application process, probably as they get this new process down as well, because again, they know you, they have a lot of information on you. So go in prepared, but expect that they may not be able to get to you today or even early next week. The Small Business Debt Relief Program, this is the only slide we have in here. And just a reminder that this program provides immediate relief to small businesses with non-disaster SBA loans. And under it, the SBA is going to cover all loan payments on the SBA loans, including principal and interest and fees for 6 months. This relief will also be available to new borrowers who take out loans within 6 months of the President signing the new bill into law. So which program is right for my nonprofit? We've had many conversations with our clients this week, and our nonprofit clients and others are looking through and saying, how do I go about this? You really have to look at cost benefit of each one of the programs. And if you apply for one, then you can't take another. Which is the best way of going? Some nonprofits are saying, where is the free money? You know, what can I get that is free money? Except for this, the EIDL, this $10,000 that we talked about, there's going to be accountability and need really as you go through and apply for these funds, particularly when we're looking at PPP and able to get those the relief on the backside through forgiveness. So when the EIDL, whether an EIDL, which is unrelated to COVID-19, has already been received, or a business receives a COVID-19 related EIDL between January 31st, 2020 and June 30th, they may also be able to apply for PPP and small business debt relief. So just know, some people are confused that, well, do I apply for the EIDL or do I apply for the PPP? Many times you're applying for both. That may make the most sense for your organization. And this is a decision your finance team, your board of directors, your management team will need to make as they look at the cost benefit. Just remember, funds that are obtained across multiple programs cannot be used to cover the same expense. So if you have a payroll dollar you're calculating under PPP, that dollar cannot be used in another program, that same dollar. So nonprofits are also going to prepare a good faith certification. We've seen a couple of these come across today. Earlier this week, we were getting calls from our clients, our nonprofits, saying, it looks like I'm going to need my CPA to make a certification. The certification is not from your CPA firm. Your certification's from your organization. The certification is made in a way of attesting that the loan is needed to continue operations during this emergency that we have going on, that the funds are going to be used to retain workers and maintain the payroll, that the applicant does not have any other applications pending, and from February 15th, 2020 until December 31st, 2020, that the applicant has not received duplicative amounts under this program or under the SBA disaster loan for the same purpose. The application actually came out, I want to say either last night, maybe at midnight, I saw it circulating around today. The sample application that was released earlier that we have provided links to has changed. I believe we've got our links updated today to the new information. But payroll and financial information to have available, I mentioned earlier, there's been a lot of questions. Is it calendar 19 or is it the last 12 months? Like April to March 2020, we had been saying have both available. You don't want any holdup when you get to your bank applying for PPP. Right now, more of the guidance we're hearing it is 2019, but please get clarity from your lender on what they are expecting. Also, your Texas workforce, your state unemployment tax, your quarterly state unemployment insurance, you'll need that information. Start and termination dates that occurred in 19 or 20, depending on what your bank is asking for. Health insurance, your projected payroll cost over the 8-week period following the loan. Rent, utilities with a 3-month forecast projection on these. 3 years of historical tax returns, and the most current balance sheet, your statement of financial position for the nonprofits with the debt schedule, and monthly statement of activities over the last 12 months, which is the equivalent, of course, of your income statements. The program today would not be complete if we did not hit on all of the highlights on the tax implications. And so for that, I'm turning over our program at this point to Angie Armstrong. Again, Angie, many of you know, is a tax director and has been serving many nonprofits on this call today for many, many years. We appreciate your guidance, Angie, and I'm turning the program over to you now.
Great. I hope you can hear me okay. Deborah, you may need to unmute me. So we're going to jump into taxes. Mostly in nonprofits, we don't tend to worry about taxes, but now we're going to need to, because if you remember back earlier in the presentation, we talked about what Washington's response was. And Washington's response included lots of different parts, one of which was what Deborah's already covered, being the SBA loan programs. The other part of the relief that we're seeing from Washington has to do with payroll taxes. So we're going to kind of jump into that real quick. The first part here is phase one. The first thing that anybody did to help us during this crisis was the relaxing of the deadlines. So for nonprofits, unfortunately, your Form 990s and 990PFs are still due May 15th, but those can be extended until November 15th. So all the relief that you were hearing about the individual income taxes being relieved until July 15th did not cover us as nonprofits. Also for nonprofits, this extension did not apply to payroll tax reports and your payroll tax due. Those are still due. Now, just a couple days ago, the Texas Workforce Commission has announced that they are going to do a 1-month extension because they are going to be overwhelmed with unemployment claims. So I believe I was told that if you go on the website to try to file, you're not even going to be allowed to. They're going to lock us out for a month, okay, to help themselves. So for employees, one of the things that, you may get this question from employees of your organizations or friends is, what about estimated tax payments? Because this is a little confusing. First quarter estimated tax payments are deferred until July 15th. But your second quarter that was originally due June 15th is still due June 15th. So you'll pay second quarter in June, first quarter in July. And as individuals, the taxpayers are not required to file anything for these extensions. It's just automatic. Okay. So like I said, phase two that the Washington's response to the coronavirus was the Families First Coronavirus Response Act, the FFRCA. So in on March 18th, they came out with some relief for businesses and nonprofits that are going to impact your payroll taxes. So there's kind of some bad news in here. You've already probably dealt with this, where they've expanded some payroll benefits that you're going to be required to pay to your employees. We're going to go over that here in a second. The good news, though, is what you're going to be paying to those employees becomes a credit against your payroll taxes. So this is all about keeping employees employed and providing relief in the way of payroll taxes. So just a quick note, don't forget to file for your refund if you had to pay the parking tax in 2018. That was that, not being able to deduct costs related to providing parking for your board members or employees. So let's jump into these two tax credits that were in the March 18th legislation. There's two different pieces of it. So over on your left-hand side is the Family Medical Leave Expansion Act, the Emergency Family and Medical Leave Expansion Act. And on the right-hand side is the Emergency Paid Sick Leave. I'm going to try to go pretty quickly because we've had a little bit longer to digest this. And at the end of the program, we have some great links to the Department of Labor for answering questions. So what was this? This is where you are required to provide paid and unpaid public health emergency leave. So if you have less than 500 employees, your employees could have 10 days unpaid, but then you are required to pay up to 10 weeks paid. Contrast that with the emergency paid sick leave. This is if you have under 500 employees, you are required to pay for 10 days paid leave for your employees. The how much is based on, you can see that there, if your employee needs to leave work, it's $511 a day. And if they're caring for a family member, it's $200 a day. The cap for the family and medical leave, you'll see there is also that same $200 a day. So then what happens is you pay them, and then you turn around and you take a credit on your payroll tax report. So the IRS about 2 days ago maybe has issued this new form 7200. I think we provided a link for it, but it is now available on the IRS website. You are going to have to coordinate if you are using a payroll provider, if you're using ADP or Paychecks, because if you file the form, you have to let them know if they're filing your 941s, because they have to coordinate. I don't know if ADP and Paychecks is going to file this form on your behalf. It's too early to know that, but there's going to be a lot of coordination to make sure that you're getting that credit on your 941. Other good news is that those are quarterly filings. The good news is you can file the 7200 almost as soon as you pay that tax. So if you were paying a tax on a monthly basis, you can go ahead and file the 7200 for the refund. You don't have to wait until the 941 goes in, maybe 3 months later. Okay, this is going back, really this is just more information, and this includes the link. This is a really good link for the FFCRA to give you the details. I think they're up to in the numbers of 60 Q&As that they've answered related to this program. I do want to talk just a little bit about the 500 employees. If you have less than 500, you're providing this care, or you're providing this leave. You exclude your independent contractors. As you can kind of tell between the first part of the program and the second part of the program, a lot of confusion over these independent contractors. So this is good if you have less than 500 employees, you're excluding those independent contractors. And you're going to count everybody who has been employed with you for at least 30 days. And then I gave you that link because a lot of this is they provide very good examples, but do know that if your employees are working from home, if they're able to provide their job, that's called teleworking now. And if they're working from home, you don't have to call that leave. That's not leave if they're able to do their job. So be careful with that. That's something that we're getting a lot of questions on. And I really would refer you to the DOL questions and answers because it's so good and it's very carefully thought out there. So I'm trying to give you the highlights so that you can go back and be able to have time to look at things in more detail if you need to. And that is also going to cover qualified health plan that you would allocate to those wages when you get your credit back. Okay, there is an exception, and I wanted to get into this for our smaller nonprofits. If you have less than 50 employees and you've been closed, or this would really crush you. If you had to pay for leave, it would jeopardize the viability. That's the words that the DOL is using right now. If it would put you out of business, you do not have to pay that leave. Okay, right here, very long slide, come back and read it later. But basically this says that if it were to put us out of business as a nonprofit, we have less than 50 employees, then we aren't going to pay the leave. So there is an exception available. Okay, we're going to jump over to the sick time, because this is a interesting way they broke it out. They broke it out between employee leave and family leave. So if your employee themselves is out and you're paying sick time for that 10 days, if they're out because of being told to quarantine, or they're experiencing symptoms, or they have the virus, you pay it $511 per day for the 10 days. If your employee can't work because they're caring for somebody in those same classifications, or the person that they're caring for, their school's closed, then you're paying at $200 per day. So that would be a $2,000 sick leave. So know that there's differences there. I've had a lot of people think that it's just $500 or $511 a day every day, and it's not. Okay. We know that back when this all started, the thing that was in the news was the individual rebate. And of course, this is still coming. I don't know if anybody has seen these hit yet, but the individual rebate is the $1,200. If you make less than $75,000, it phases out between $75,000 and $99,000. And if you're over $99,000 as a single person, you will not see an individual rebate. They were supposed to be coming out immediately. So hopefully people are seeing this relief right away. And it's important as a business owner, you have this information available to educate your employees, to maybe help them not freak out when you're having to furlough or cut their hours. And so we included it here just so that you have the rules handy if the questions start coming to you as employers. Okay, I think most people on the call are from the Houston area or close by. We know how to do the employee retention credit. We did it back with Harvey. So we're back to the employee retention credit. This is going to be available up to $5,000 per employee that you keep working, that keeps working for you during this crisis. So I'm not going to spend a whole lot of information and time on this. We've done it before. The rules are the same, but there's a very important piece here that you need to remember. If you take the PPP loan that we talked about earlier, you cannot use the employee retention credit. They don't want double dipping. So because the employee retention credit is all about keeping your employees working, if you're taking the PPP loan to pay that payroll, you're not going to have the employee retention credit available to you. There's also going to be a really good link. The IRS has very good Q&A on employee retention credit as well. Okay, this was something that I actually didn't know, so I wanted to share it with you, that if you have less than 100 employees and your employees continue working full-time during the whole crisis, they're able to work from home, your business is still open, then you get a credit for whatever you're paying them, their full-time work. If you have more than 100 employees, these businesses don't benefit as greatly. They are only going to get a credit for the wages paid to employees who didn't work. So it kind of cuts that down. So if you've brought your employees down to 30 hours a week instead of 40, and you're paying that $10 or that 10-hour difference, that's where your retention credit is going to come from. It's not going to be their full wages. Okay, this was also in the news. This is one where I can't find a lot of guidance on how this is going to happen. But when you get ready to pay your Social Security tax for your employees, there is a 2-year deferment. So you'll be recording the liability on your books and not making the payment. The first payment is not due until December 31st, 2021, and you have a deferral all the way to December 31st, 2022 for the other half. You will be paying the portion that attributes to their wages, the employee piece will be transmitted. It's just your half won't be paid for 2 years. Again, the same caution here. If you're taking a loan through PPP, you're not going to be taking the deferral on paying your payroll taxes. So there's a lot of decision making to happen for your organization. What's best for us? Tuesday, the IRS announced that they're going to waive penalties for failure to deposit your payroll taxes on time if you're delayed due to the implementation of all of these new rules. So a little bit of a break there as we try to figure out what all this means. I left this in, this is from our earlier presentations this week, because again, your employees are nervous, they are worried about money, and this is something that'll help you answer those questions. You do not have to take your RMD, your required minimum distribution, from a retirement account. And in addition to that, if you're under 59 and a half, you would normally pay a 10% penalty if you took money out of that retirement account. Because of the CARES Act, that 10% penalty is waived. So yes, it's still taxable income if you take it out of your retirement account, but you're not going to have to pay that extra 10% penalty. And they stretched the rules. Normally, if you took a distribution and you were going to pay it back, you had to do it in 90 days. They've stretched that to 3 years. So if you have employees that are scared, this is information that you can share with them to help. Okay, and notice, I'm sorry, I don't know how to, I'm sorry. Notice here I said that this is for a qualified individual, and a lot of people have been concerned about, well, I didn't get the virus, am I a qualified individual? If you look here on this slide, part 3, if you've experienced adverse financial consequences, if you've been furloughed, laid off, had your hours reduced, you've had trouble with daycares or school closings, they've covered it all here. So I think almost all of us are a qualified individual for that relief from retirement accounts. I'm just going to skip this. I already said it. Okay, there's been a few changes for charitable contributions. I want you to get all excited. Wait for it. $300 above line deduction. So we as nonprofits kind of noticed last year with individuals not itemizing, we felt like that hurt our contributions we were receiving. Now there's a $300 above the line deduction. Will that help? I don't know, but I was going to share with you, I did get an email today from a community college advertising that, you know, please make a donation. There is a new $300 above the line deduction, and they were using it in their plea for funding. The individuals that, you know, were limited to their AGI limitation, let's say they, you know, made $100,000 and they wanted to give away 50,000 of that, they were capped at 50. Well, now that's increased to 100%. So some of our older clients that are wanting to give away their wealth do go above these AGI limitations. So now that's opened up to 100% for 2020. Be careful if you're talking to donors that are trying to do that through a donor advised fund, because that's not going to count. You can't set up a donor advised fund, deduct more than 50% in 2020 and have it count. And for corporations, we also got some great relief. Their cap went from 10% to 25% of their taxable income. And those that are doing contributions of food, if you're receiving food from businesses, that increased from 15 to 25% as well. So those are benefits that we received in the nonprofit industry as well. Okay, so what we did is tried to come together with just some steps. It seems like because our nonprofits have never been in the SBA loan program, this is all new to a lot of people. So we tried to just break it down into some steps, and I'll go ahead and review these. The first one being contact your bank, and most people have, but if you're going to go for the PPP, you have to go through your bank or your lender. So are they going to do this for you? If they're not, you're going to have to find that relationship. There's going to be a link later that the SBA has provided us for Houston area that gives all the banks that they already have relationships with. Number two, figure out if you're going to do the EIDL emergency grant, and we forgot to put our up to 10,000, but it's up to 10,000. Again, you want to act quickly, and the EIDL grant is the one that you can file for yourself online. And a big caution here in number three, we were on a conference call with the SBA director for the area of Harris County, and he said the scams have already started. They are using the SBA logo and telling people, like perhaps through an email, that you need to call in immediately, that your loan has been delayed. Don't fall for it. They said that they have seen multiple scams, and we are going to have to be very careful about that. So number four, work with your board. Remember that they're there to help. They have banking relationships. They may be able to help you with your application process, with planning and budgeting. So definitely, we're all in this together. So use all the resources that you have. You may have a finance committee that can help. Do you need to apply for both loans? You know, the payroll protection loan, 75% payroll. But if your other operating expenses are great, you might need both. You might need an EIDL and a PPP loan. Again, work closely with your human resource department. They are the ones that have, you know, make sure you're complying with the new law for the family medical leave, the emergency family medical leave, and for the sick leave rules that just changed. I think we all have a lot on our minds that came out in March. Did we all quickly make sure that we were okay? So stop and check that. You want to talk to your payroll service providers because they are developing, we know, special reports that they anticipate that you're going to need for your loan applications. And then I did say make an appointment. I've had one client at least who said, oh my gosh, they can't even get me in until Tuesday. So do make sure you've got an appointment. You do have a time to get in there and see them. Again, just watch. Number 9, just watch. If you're going to do PPP, you're not going to be able to do some of those credits. So kind of watch that. And which one do you think is going to be better, more benefit to you? And then I added 10 because you're going to have to track all these expenses. And I heard somebody along the way this week say that they're going to set up a new account to make sure that whatever they get in from that loan is used only on what it should be, and that they can track the 75% payroll. So, you know, you may very well want to set up some new accounting procedures right now before the funds even hit your account. Okay, we've been talking about these resources, and they're great resources. We have been trying to keep everything updated and find the best resources for you. So the second one there, the lending matching tool, that is the one that if your bank isn't doing these SBA loans, how you can find somebody who is. The Department of Labor, I talked to you about the FFCRA. That is where you get the great 60, I think they have 60 Q&As there for helping you with that. The new PPP application that came out during the night is the second to last one there. So that will be different than anything else you've seen this week. Here is the IRS links. That new form there is the third one, the 7200. So definitely get familiar with that so that you can get your refunds just as quickly as you can if you're paying into the family medical leave and sick leave. I wanted to spend just a second here on the one in the middle, the Greater Houston Community Foundation and the United Way. If you haven't had time to see this, they have started a Greater Houston COVID-19 Recovery Fund. So I was on their website today, and they're not doing a direct nonprofit application. What they're doing is what they call a matching nonprofit inquiry form. But make sure you take a minute and go fill that out. Tell the Community Foundation and the United Way what you're doing. What do you need? What resources do you need? That will help them with dispersing funds that they hopefully raise through this campaign. So that's new. That came out just 1 or 2 days ago, I do believe. And there's some interesting statistics there. They've already done surveys of maybe 75 nonprofits. And I noticed that number 3 was information and guidance, that the nonprofits are just saying, we need help. We've never worked with the SBA before. We need help, we need information. And so that's one of the reasons that Briggs and Veselka is doing this today, is we just know that there's a great big need for information. Okay, so I've seen a few questions come in, and we're answering those as quickly as we can. Anything that we didn't answer, we will after today, or after today's presentation. But here is our SBA assistance at bvccpa.com. That is to get email help, and that goes to our task force that has been interpreting these rules all week, all night, all week. So definitely there's help there. Here is our SBA homepage, where we're trying to keep everything just as current as it can be. And lastly, Deborah, who started our program today, her email is there provided, and she will route that around with Kaylee and I and other nonprofit experts here that are ready to help you. So we thank you for your time. We finished a little bit early. Hopefully you can grab a cup of coffee and get back at it. Thank you very much for joining us. We appreciate it.